European stocks join a global sell-off following a surprise hawkish turn by the Fed. Officials raising their forecasts for next year's rate reductions. Well, the yen slides as the BOJ governor casts doubt on potential rate hike in January after the central bank actually kept its interest rates steady. Plus, a U.S. government shutdown looms again. President-elect Donald Trump opposes a stopgap budget bill, urging lawmakers to raise the debt ceiling. So all of that is playing out in the markets. First of all, European markets. This is a picture across the board. Now, we're seeing a lot of red given the Fed expectations. There's been a repricing not only on some of the European bonds, but actually equities taking a leg lower, given all of the questions about not only the U.S. economy, but of course, the support from the Fed. Cross-asset, a couple of other things that we need to watch out for. So this is a pure U.S. play. We look at U.S. 10-year yields, but also a currency, euro dollar. Again, it does seem like some of the concerns or questions about the Trump tariffs and the Trump administration are now coming into play, filtering through also to the Fed's thinking. S&P futures gaining 0.4%, and yen on the back of BOJ 15694. Now, Norges Bank has left its benchmark interest rate at 4.5% as expected. It says the rate will now most likely be cut in March 2025. So it's a central bank day. We also have BOE later. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Fed has lowered its benchmark interest rate for a third consecutive time, but cautioned over how quickly it can continue reducing borrowing costs in 2025.
I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher.
Now, for more, we're joined by Bloomberg's Valerie Teitel. Valerie, so what did Powell say that was so shocking or so surprising?
Francine, it very much was their guidance for how many cuts they're penciling for next year. They dropped it down from 4 cuts previously to now only showing 2 cuts penciled in for next year. Powell also went on to say that this is a new phase of the cycle. And in central bank speak, the market took that as this is a Fed who is going on pause. And we're now even just pricing 1 cut from the Federal Reserve next year. So we're taking even a step further from their projections. There was also some very surprising things in their SEP yesterday. That members saw inflation risks now tilted to the upside. If you take a look at this in my next chart, Francine, it was very shocking just the amount of members in the FOMC who are worried about a resurgence in inflation. 15 out of the 19 members are now worried about the upside risk to inflation. With the Fed's concern squarely on inflation, this caution about Fed cuts moving forward is very much warranted.
Yeah, and the market reaction was pretty swift.
Very swift market reaction, a big fall in the equity market yesterday. One of the weakest days for the equity market post a Fed decision that we've had in 20 years. We also saw yields rising across the curve. The 2-year from the 10-year also substantial weakness in the Treasury market. We're now 12 basis points higher on the 10-year yield since that decision. The other big mover was the dollar, Francine. The dollar saw a big bout of strength, up nearly 1% after the decision. And this also played out across markets, Francine. We had the Brazilian real, the Indian rupee in EM markets, those currencies hitting the lowest that they've ever traded at versus the dollar.
And meanwhile, we also had the BOJ decision.
The Bank of Japan decision. In the press conference, Ueda really convinced us that he was in no hurry to hike interest rates. And we saw the pricing for a possible hike next year evade in the market. We also saw the yen weaken quite substantially versus the dollar. It's now above that 157 mark. We have the Fed, who is in no hurry to cut rates. And then we have the Bank of Japan, who is in no hurry to hike. This means the release valve is for a weaker yen going forward.
Valerie, thanks so much. Valerie Teitel there with the very latest on central bank moves. And then, of course, we have the Bank of England later. Now, we're joined by Laura Cooper, Global Investment Strategist at Nuveen. Laura, thank you so much for joining us. You always come on when there's stuff going on in the markets. So the Fed killed the Santa rally. Okay, this is my favorite headline of the day. Did the markets overreact?
I think maybe perhaps the Fed overreacted. If we look at some of the surprises that did come through in the meeting yesterday, perhaps it was the core PCE inflation revision sharply higher, as well as what Valerie mentioned, the tilt towards members suggesting that inflation risks are to the upside. I think the surprise was really around how quickly they pivoted from focusing on the labor market back to inflation. And if we look at the November CPI print, some of those sticky measures like shelter, it actually on a 3-month annualized basis is now trading at coming in at a cyclical low. So the question is, could we actually see more of that disinflationary pressure next year? Question around policy implications of inflation, but that's key. That's really the key question heading into next year.
I mean, I guess how much of this is, the last mile is always the toughest to get inflation under control, and how much of this is like an insurance against some of the, Trump policies that could be inflationary?
And I think something that really stood out in the press conference yesterday when Chair Powell was asked about it was just around how many members are starting to incorporate the potential policy measures coming through next year versus actually looking at the realized data. And he did suggest that some members are incorporating, some are not yet. And I think that's really the key question for markets. Is this a central bank that continues to look in the rearview mirror, or are they actually looking at some of that uncertainty and perhaps wanting to keep that, let's say, dry powder, keeping rates in that restrictive territory to kind of make sure that they have room to ease or keep restrictive as needed next year?
Laura, when you see the Donald Trump policies, and again, there are policies that have not really been said with like details, but you have a restriction on labor supply. That could be a concern of the Fed because of the immigration. And then you, of course, have, the promises on policies on trade and tariffs. Is that automatically inflationary?
I think certainly from the tariff perspective, it is inflationary, but to a certain degree. I mean, we've estimated it's about 2 percentage points of GDP. It's going to be a one-time price level shift. The key risk, though, is the retaliatory measures that could come through from key trading partners, in which sense that could more be the trigger for an inflationary spiral. It's not our base case at this point, but as you mentioned, the wage pressures as well. But kind of on the flip side of that, what if we do see this greater deterioration in economic activity? If we do see some of those tariffs weigh on growth in the near term, it's going to tilt activity domestically, but beyond that, I think we're going to be in a more of a challenging backdrop.
What about this uncertainty over the federal funding deal? How much of a concern is that? I mean, I guess it has implications for the balance sheet runoff.
And I think that's a key question, certainly, that we're watching for. And it's like, how do we position in this type of uncertain backdrop? I think, we've been hesitant to take on duration exposure. We are seeing that 10-year yield in the U.S. about that 450 mark. That's really kind of the middle of the range that we expect to happen next year. But of course, a wide range of outcomes around that. So really, we're positioning still in the front end of the curve, playing that quite tactically. And as well, if we look at the supply pipeline coming through in fixed income in January, we want to keep some of that powder dry. We're in this thin liquidity type of environment heading into the year end. Moves are really exacerbated. So I think right now it's just kind of keeping watch for what clarity could come through at the end of January.
In the corridors of power, Laura, I keep on being told whatever happens, the U.S. will be fine. It's the rest of us that will suffer. So if you have a Fed saying this, what does it mean for other central banks?
Well, I think the key the key theme that we're going to watch for next year is around monetary policy divergence. We're already seeing that play out. We saw the Fed out-hawk market expectations. The Bank of Japan this morning is essentially out-dubbing market expectations. I was surprised by just the extent that they're pushing back on those upside inflationary pressures. They did allude to the fact that FX is going to be more of a meaningful impact, but yet we're almost seeing them kind of guide the market that we're not going to see a hike in January. So I think this will be a predominant theme next year. If we think about Bank of England, ECB, we could look at a number of them, but that's going to be a key thing we're watching for. That's going to drive, I think, FX and rates volatility.
So ECB, and we'll come back to this, but do you think ECB can also be more dovish than expected?
I think if we look at what the market implied path is now, so looking at that terminal by the end of next year around 175, it's actually fairly kind of priced, I think, at this juncture. We do have a lot of those downside growth risks baked in. Yeah. Christine Lagarde said, the direction of travel is clear, the magnitude is clear. I think this is an ECB that, Yes, they're data dependent, meeting by meeting basis, but I think they're guiding us to suggest that we are going to have kind of that steady pace of cuts next year.
Laura, thank you so much. Laura Cooper there from Nuveen stays with us. We'll talk a lot more about the ECB, and we'll also, of course, touch on Bank of England. Now, some corporate news. We're watching Micron tumbling pre-market after its revenue forecast missed projections by about $1 billion. Now, the largest U.S. maker of computer memory chips was hurt by sluggish demand for smartphones and personal computers. Micron pre-market down 14.5%. Now, coming up, a U.S. government shutdown looms again as President-elect Donald Trump opposes a stopgap budget bill. So we'll have plenty more on that story next. And this is Bloomberg. Now, President-elect Donald Trump says he opposes a proposed government funding bill threatening a stopgap measure that would keep the government open until mid-March. Bloomberg's Joshua Galou joins us now for more on this. So, Joshua, thank you for joining us. What is Trump's preferred scenario, and is that even realistic?
Well, it's getting more realistic by the day because he's put Speaker Mike Johnson in a very difficult position. What he said yesterday, his ideal scenario is that the current spending bill that's now basically been rejected include already a provision to suspend the debt limit. That is basically setting up. He's showing what a fight that he's going to have on spending going forward. The question is whether Johnson can still pass a continuing resolution, which would keep the government being able to spend for the next 3 months by Friday, at which point the government would shut down if he doesn't on Saturday. And to do that, I think he'll need to trim off some of the things that he had already loaded into this spending bill to compromise with Democrats. That's tens of billions of dollars in hurricane relief, farm aid, and other things that Republicans don't want, certainly on the farthest right portion of the Republican Party.
So where does this leave negotiations over the spending bill?
As of Wednesday night, there was really no new proposal. So they're going to have to start fresh again now and hopefully get to something by Friday to prevent a shutdown. But, Trump has really laid out a very strong position here. He wants the debt limit to be suspended on President Biden's watch, so he doesn't have to have that fight when he comes into office in January. The most likely scenario seems that Speaker Johnson will trim this down to a very slimmed down version of what he currently has, and have to rely on the whole set of Republicans, some solidarity there to get this thing through. It's really not a great look for the Republicans to shut down the government right now.
Thank you so much for joining us, Joshua Galou, there with the very latest, of course, on what's happening in D.C. Now, still with us, Laura Cooper, global investment strategist at Nuveen. Laura, I guess the concern, and I don't really know how to read this, is that if you're a global strategist, you say, right, we're going to have a lot of volatility. We thought it was a done deal. Anything but. So does it change your risk perception, or does it just impact? We don't really know how much he'll focus domestically on what's happening in the U.S. and how he influences foreign policy.
And I think it's a key question facing policymakers, and just the fact that how much could this kind of tariff impact actually impact, the growth profile. Markets are really kind of built on this U.S. exceptionalism, which we do still is going to think is going to persist next year. But then the key question is, okay, how did we kind of other countries react to this? So we've revised down our European growth forecast on the back of this policy uncertainty from the U.S. And we saw Bank of Japan Governor Ueda overnight saying, they're starting to weave in this uncertainty around U.S. policy in the new administration. Perhaps that's a reason to be cautious. They may not have clarity by the end of January. So this is going to have a ripple effect, I think, across global markets.
Laura, when you look at some of the, concerning, I guess, trends in Europe, it's a lot of countries are trying to find a government or even are going to elections. So France, we don't exactly know what happens with this very divided parliament. Germany, we have early elections in February. How do you play that?
I think at this point, you're right. It's the political uncertainty is really the dominant theme entering into 2025 for Europe. I mean, if we think about the German election, perhaps markets are getting a little bit overly exuberant that we could see fiscal flexibility come through. Yes, we could see a new coalition come through that maybe is going to be a little bit more kind to fiscal tendency, but it's going to be a period of prolonged negotiations. And even then, they're going to have to be amenable to fiscal hawks. So we could see some modest reform to that debt brake reform, but even any type of fiscal stimulus is likely to be, let's say at most, 0.5 to 1% of GDP, so perhaps not enough to really move the needle. So in our mind, from a positioning perspective, we still like German bonds. I mean, they're probably fairly priced at this point, but it's the periphery exposure for that carry opportunity. That's where the growth has really been driven, and then maintaining that structural underweight in terms of French government bonds. Yeah. Perhaps if we see more of that uncertainty play out, we could start to look at buying that dip, but not at this juncture.
What about the Bank of England? I mean, there was a huge move, actually, when it came to gilts this week.
I think the price action, we can't read too much into that. I think there was, thin liquidity. We're also seeing a lot of those positions being stopped out, which does tend to be disorderly. I think when we think about the Bank of England today, we'll be watching for two key things. Yes, it's just a statement-only type of decision, but is there any assessment about the recent upside wage pressures? I think that's something going to be interesting to watch for. And as well, this ongoing uncertainty about the budget effects on UK businesses. So we think they're going to maintain this gradual approach, but really it's going to be the key. Are they going to continue to look at that realized data, or are they going to shift focus to maybe a trajectory for inflation that's lower and growth as well that's under pressure?
Laura, thank you so much, as always, for coming on, especially on such a busy day. It's like Central Bank Week with a lot of market surprises. Nuveen's Laura Cooper. Now, coming up, a warning about Syria's new government. In an exclusive interview, we hear from Israel's Deputy Foreign Minister about her administration's doubts. That's next, and this is Bloomberg. Well, Israel's Deputy Foreign Minister has described Syria's new leaders as wolves in sheep's clothing who are trying to persuade the world they are not radical Islamists. Well, Sharren Haskel told us exclusively that her government will not be fooled by the rebels' public comments.
We're not fooled by many of the conversations and the interviews that those, rebel groups, who are in fact terrorist groups. Let me remind you, al-Jolani, he was part of ISIS. Al-Jolani was Al-Qaeda. And right now, the way that they speak, we are very aware of what they're saying, but the fact is that we are going to look on their actions, and that's going to dictate how we react to that. These are wolves in clothes of sheep, and we are not fooled by nice talks. I think that one of our worst mistakes leading up to the 7th of October is that conversation about peace, about coexistence, about that conversation that Hamas has said that they will not intend, and the Western media who have described Hamas as a legitimate government of the Palestinians, and Israel has paid a horrifying price on the 7th of October. We will not do the same mistake again. We will follow up close on the actions of those different militias groups and the new government of Syria. And the one thing that is in our mind is to make sure that we can protect and defend our borders and our communities.
Mm-hmm. Can you give us an idea of how deep Israeli ground forces are in southern Syria today?
We just a few days ago, and it was already widely reported, Israel has entered the buffer zone. The buffer zone is an area that was meant to stay clear of any armed groups, including armed militias, and unfortunately, those rebel groups have violated the disengagement agreement signed since 1974. Those groups were trying to attack also United Nations positions that were located there. And following up the situation, we've decided to enter the buffer zone to make sure that it stays protected and that those malicious groups, those terrorist organizations are not set close to the Israeli border. There was another part up in the north of the Golan Heights where we actually took a part from a topography point of view, a higher point so that they cannot surprise us. And in that respect, these actions are temporary and obviously limited. And the main goal was to defend our country and to defend our people and the communities that some of them live on that border.
Well, that's Israel's Deputy Foreign Minister Sharren Haskel. Now, later today, we'll be speaking with the U.S. Secretary of State, Antony Blinken, about the Middle East, as well as Ukraine and the foreign policy transition under a second Trump administration. Don't miss that interview, 1:15 p.m. London time. Now, the U.S. Supreme Court says it will hear TikTok's challenge to a law that would ban the app in America next month if it isn't sold by its Chinese parent company, ByteDance. The arguments are scheduled for January 10th, a little more than a week before the ban takes effect. Meanwhile, the EU has started an investigation relating to concerns that TikTok did not do enough to stop fake accounts and foreign powers from interfering with last month's Romanian presidential election. Coming up, the UAE's biggest oil producer takes control of German chemicals giant Covestro. Our interview with Khaled, Salmeen, Adnoc's Downstream Industries head. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European stocks join a global sell-off following the surprise hawkish turn by the Fed. Will officials rein in their forecast for next year's rate reductions? The yen slides as the BOJ governor casts doubt on a potential rate hike in January after the central bank kept its interest rates steady. Plus, a U.S. government shutdown looms again. President-elect Donald Trump opposes a stopgap budget bill, urging lawmakers to raise the debt ceiling. Now, in other news, the United Arab Emirates' biggest oil producer has secured nearly full ownership of German chemical maker Covestro. That's after the end of an offer period open to all shareholders. Now, Adnoc offered nearly $13 billion for Covestro in what's set to be the largest Middle Eastern acquisition of a European firm. Now, for more, I'm joined by Khaled, Salmeen, Adnoc's Downstream Industries head. Mr. Salmeen, thank you so much for joining us. Now, first of all, for international viewers, I mean, you basically have XRG, which you want to double. It's an investment vehicle to get natural gas, chemicals, and low-carbon energy with a mandate to double, I think, your enterprise value over the next decade from $80 billion now. So, first of all, congratulations. This is the first big deal. What's the path forward?
Well, clearly, this deal was a milestone deal for us. We are very happy with Covestro. It's a solid company. This company has huge innovation, invented the chemistry back in the 1930s, has 13 R&D centers around the world, over 8,500 patents, and it does operations across the world. So it's a truly global company. I think what is important for us now is to know that while we got to this really good milestone, there's still a significant amount of regulatory approvals that we need to go through, which we are very focused on, and we are engaging with all the regulators to go through that process. As we have just launched and we announced the board last week, XRG is going to go into operationalization, and we are in that setup stage, and we are going to really focus on the international gas, the global chemicals, and low-carbon fuels, and we see a huge number of opportunities that we can look at. So we are very excited.
I mean, it's a very exciting space to be in. So this basically, with the acquisition of Covestro, it'll make you one of the biggest chemical players in the world. Do you want to replicate that with other parts of the business in XRG? Are you going after big companies, or could it be smaller acquisitions?
I think that's the strategy is not the same. So low carbon fuels is a little bit more nascent market. So we're talking about blue ammonia, biofuels. Those regulations, incentives, penalties around it is not as mature as, for example, international gas and LNG.
Yeah.
So it really depends, and that strategy will have to be between greenfield, brownfield, as well as an M&A. So it's a combination. We are in that process where we are trying to kind of put the whole portfolio together
Yeah.
and see what is the right mix as we go forward.
I mean, you also have a JV, I think, with BP, right? Are there more assets that will go into that?
So at this stage, given where we are, we have not really declared what are the exact assets that will be, and that's for obvious reasons. We are definitely looking at international gas assets that are going to be a part of that. So similarly with the global chemicals, for Covestro, again, this is clear. That's the bidding entity. XRG's biggest deal is on Covestro, and we are yet to go through that regulatory approval.
I mean, in terms of chemical makers, you have Borouge and Borealis. Does that also fold under XRG, or is that still to be decided?
It is to be decided, obviously. Borouge is a publicly traded company, and if we are to go through that process, we will have to go in a systematic manner. I think, it does make sense to think about those portfolios as a value chain where you can optimize between them. But in our global chemicals, we've always been focused on polyethylene, polypropylene, polycarbonate, polyurethanes, acetyls. These are the value chains that we've been very interested in, and we will continue to be interested in. And clearly, as a portfolio, there is a lot of synergies that can happen. But for us, Covestro is a standalone platform, a growth platform. It's a long-term partnership with a long-term view, and we are very happy with what we have achieved so far.
So what exactly is next over the next 12 months? I guess it's regulatory approval, integration, and your strategy seems very focused, of course, on chemicals. Do you need extra refineries to make sure that the chemicals are turned into something else?
So clearly, with Covestro, it's a standalone business, so there will be no integration of that. We see this as a standalone company, and we have a growth strategy around it once we are done with the regulatory approvals, clearly. With relations to refineries, we are not really focused on chemicals that depend a lot on naphtha or crude and liquids. We're focused on ones that are mostly based on natural gas. And as such, refineries would have to look at it case by case, but it's not a part of the core strategy. In the refineries, we can see that come potentially in the biofuels.
Right.
So in our strategy, the biofuels, the biodiesel, SAF, are interesting fuels of the future, and we will continue to look at those and see how we develop them.
So PetroChina, of course, China's largest oil company, said last month that they see peak oil demand in China next year. Is that also your base?
I would probably see that from an EV penetration.
Okay.
So while they are talking about it from a general, I would say that's probably peak transportation fuels rather than peak energy. I do expect them to maybe grow in their energy demand, but not in gasoline demand. So as such, these are important differentiations. I think what is clear is that the energy needed for delivering growth in the long term will always be there.
Yeah.
Low carbon energy will have an advantage. And I think, we need to keep track of the mega trends, the AI demands, and taking that power all the way to deliver that. So, there is redistribution and evolution and transformation happening in the energy market.
So does India, can India actually absorb some of that demand if it's coming down from China?
I think globally, we see the fundamentals around the oil markets are strong. Obviously, the Fed's got the interest rate. That's a bit of a bearish news in the forecast. But personally, I think the fundamentals are still solid, and we will continue to see that growth. We are far away, I believe, in my personal view, from that peak oil scenario or peak energy. Now, a lot of the agencies that follow that have revised their forecast over the last 2-3 years, and you can see that there is more energy demand. Now the question is, what is the most sustainable, low carbon intensity fuels to fuel that growth?
But do you worry about the Trump administration flooding actually the world with extra oil, American oil?
I'm not worried about the oil markets. The oil markets are very resilient. They are well balanced, and the arbitrages closes very quickly. I think supply-demand fundamentals will always be there. And at the end of the day, as long as you are a producer that is first quartile with a low carbon footprint, you will always be in these markets, and we are a very reliable supplier in that sense. So as potential developments in shale comes in, they will have their own challenges, but at the same time, they might have a slice of the market.
What will be your main challenge in the next 12 months?
I think right now we're very excited about what we've achieved. We are very excited about going through the regulatory approval with Covestro, and we are hoping that over the next few months that we are able to get that over that main hurdle and work with the management to develop the growth strategy.
Khaled, thank you so much for joining us. That was, of course, Khaled Salmeen, Adnoc's Downstream Industries head. Now, coming up, EU leaders gather for the final time of 2024 in Brussels. These are live pictures. We see a lot of them, of course, coming in. The Chancellor of Germany, Olaf Scholz, taking a bit of a doorstep with a lot of reporters on the ground. We'll also be on the ground at the summit next, and this is Bloomberg. Weidel is the first ever chancellor candidate from the far-right Alternative for German party. Now, the party is currently second in the polls ahead of the country's elections in February. In an exclusive interview with Bloomberg's Oliver Crook, she slammed the EU for undermining the country's auto industry and called for a German exit from the bloc.
We don't see that the European Union in its current state is an institution that is working well, right? So what we need to have is free trade among the European countries, but we don't need all the bureaucracy. So, example, the European Commission, which is actually not voted, right? So you have a executive power like the Commission with also legislative power. That is not elected. So this is a huge democratic deficit. So this commission decided just to forbid diesel and benzene, like all the traditional fossil motor, right? So what happens is that they actually ripped off the German automotive sector.
Many people are critical of the EU on many of the points that you make here, but very few are making the case for withdrawal from the EU, and specifically on the euro. How do you envision that happening? Was it a return in Germany to the Deutsche Mark? Is it then? Explain to us the mechanics of how you imagine that working if you had your way.
Well, this is the entire discussion around the Dexit, right? Yeah. So we think that the European treaties need to be reformed so that every country within the European Union has a right, first of all, to have a veto against the Commission. For instance, that the German government could say, okay, we don't agree, we say no. Mm-hmm. So the veto power in the European treaties. And if a country wants to leave the European Union, why not falling automatically into a free trade zone? I highly recommend just a free trade zone, because all the bureaucrats, thousands of them, like eating up taxpayers' money, they just disturb real competition among the European countries. We don't need all of these bureaucrats that have actually who have no clue what they're doing and destroying our foundation in the European Union.
Weidel there, the far-right Alternative for Germany, of course, candidate for Chancellor. Now, Oliver joins us from Brussels, where EU leaders are gathering for their final meeting of the year. Ollie, connect, of course, the domestic situation in Germany to what's happening in Europe.
Yeah, I think it's a fundamental question, Francine, because when we think about what the issues before the leaders here are, I think there's one topic that isn't officially on the agenda but is on everyone's mind, is the fact that basically you have major dysfunction in the two sort of twin engines of European politics at the very core of the EU, in France and in Germany. And what's interesting on the side of the sort of French side versus the German side, as you know, Francine, Marine Le Pen herself really abandoned this idea of leaving the EU and leaving the euro. That is not the case for Alice Weidel, who is basically saying that not only does the of Germany need to leave the EU. It needs to leave the Eurozone. So the point is that she will probably not have any actual power in this election, though she has been very powerful in evolving the debate in Germany, certainly on the topic of immigration. And with 1/5 of the vote, with 20% of the vote, it is impossible for the sort of German political establishment to ignore the AfD at this point. So this is something that is going to be present in the minds of leaders here when they're thinking about the dysfunction. Of course, the other thing that is looming, we just saw Zelensky walk in. How much more support can they bring forward to Ukraine with Donald Trump coming into the Oval Office very soon over in January? I think that there is a recognition, at least from Zelensky, from what he just said here, that basically there is no path forward without full U.S. support. And I think the Europeans, though they say that they need to be standing by Ukraine till the very end, they are not really protagonists in this war. They are paying for some of the gas, but they are not driving the car. These are going to be the issues before the leaders here. And also, how do you sort of Trump-proof some of the initiatives here in Europe? Because this is the last meeting before that inauguration over in January.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on the summit. Now, Russian President Vladimir Putin is addressing the nation in an annual end-of-the-year speech. He's also taking part in a phone-in with Russians. It comes just days after a Russian general was assassinated in Moscow, which Ukraine has claimed for. Now, to discuss all of this, we're joined by Bloomberg's Stephanie Baker, who's also the author of Punishing Putin Inside the Global Economic War to Bring Down Russia. Stephanie, thank you so much for joining us. I mean, there are live pictures, which we'll get to in a second, where you see Vladimir Putin surrounded by, I think, about 400 people. This lasts like 3-4 hours. He's had a bad week. I mean, let's be clear. He's had a bad 2 weeks because of the assassination of the general in Moscow, but also because of Syria.
Absolutely. And you see, this is a highly scripted event, and he uses it as a sort of demonstration of his control over the political scene. It's got started off this morning dominated by questions around the economy. It just came out this morning that inflation is now at 9.5%. Now, that's partly due to sanctions as well as his record spending on the war. But, you know, inflation is beginning to bite, and it's not responding to the Russian central bank's efforts to cool it. Interest rates are now at 21%. And are expected to move up further. And there's a lot of political tension over this, with various figures, business leaders, complaining about the high interest rates and warning of potential bankruptcies. So we'll see how many questions he gets on the economy during the course of this event.
I mean, I find this event quite fascinating because it's on the course, you know, over like 3-4 hours. Are they real questions, or are they, you know, hard enough that they make him look good, but they're still very managed?
I think exactly the latter. They're edited heavily. They're meant to allow him to show off the issues that he thinks are important, as well as to try to stamp out criticism. And I think one of the things he's been trying to do is separate the rising inflation from the war, to try to demonstrate that these are two unconnected events and that he's got the situation under control. He did say today that inflation is a worrying signal. But remember, there were additional sanctions a couple of weeks ago on Russian banks, in particular Gazprom Bank, which had been used for energy payments globally. And that caused the ruble to fall to 113, 114 to the dollar. And he had to actually come out and say, there's no reason to panic, and that's never a good sign.
That's never a good sign. And also, our most read story when it comes to Russia is actually, you know, the central banker, Elvira Nabiullina, who for such a long time was considered one of the best, is now also under attack from officials who say that she's destroying the economy with these higher interest rates. So when we look at the Trump administration incoming, how does this change Vladimir Putin's thinking on what he wants to do with Ukraine? Does it change?
Well, the only person the only figure that can be attacked is Nabiullina. He cannot be directly attacked. So in a weird way, the attacks on her are an indirect attack on the situation broadly. You know, he has said, you know, he's ready for negotiations, but in reality, what he wants is going to be very difficult to come to an agreement with Ukraine. He wants Ukraine to be neutral, not to join NATO, to have caps on its military, and it's hard to see how Ukraine will be able to agree to that. And I do think I'll be looking out to see if he gets questions on the murder of this general, Kirillov, which was a remarkable attack. And I think there will be fallout from this. I think we're going to have to see what kind of response Russia has to this, whether it's a stepped-up response in Ukraine or perhaps on a NATO country.
So, so I'm fascinated by this because I've heard, like, look, this is just a tactical it was a thing to do tactically to, being closer to not losing in the war on Ukraine's part. But I've also been told this is a great way to show off to Donald Trump, to say, look at what us Ukrainians can do so that he supports Ukraine more. What do you think that was?
Well, absolutely. And, this shows the sophistication of the Ukrainian intelligence operatives that they were able to pull this off. And I think it is meant to show that they do have power. They are able to disrupt and bring the war home to Russia, which I think is really important to try to undermine support within Russia for the war. But Ukraine is in a really difficult position with Trump coming in and vowing to end the war in a day, with waning support in the U.S. for continued military and financial aid for Ukraine.
Stephanie, thank you so much. As always, Bloomberg's Stephanie Baker, who's also the author of Punishing Putin. It's a great book. It came out about 6 months ago, Inside the Global Economic War to Bring Down Russia. Now, coming up, annual bonuses at Barclays could rise by up to 20% as expectations rise for awards on Wall Street. So we'll bring you that Bloomberg scoop next. And this is Bloomberg. Welcome back, everyone. Huge repricing when it comes to money markets. Traders now only see a 50% chance of BOE rate cut in February. Again, there was a huge swing in the last couple of days, and I think that's probably exacerbated by the fact that Powell's also signaling a hawkish Fed, with the focus has returned to firmly coming down inflation. Now, Bloomberg understands that Barclays is set to increase annual bonuses by as much as 20% after an improved year for traders and investment bankers. According to its annual report, bonuses at the bank fell 43% across the board last year. Now, for more, let's bring in Bloomberg Opinion's Paul Davies. Paul, thank you so much for joining us. I have a million questions on banking, but this has, I guess, surprisingly been a good year for Barclays. The bonuses are high.
Yeah, no, it's been, I think across the board, it's been a much better year than lots of people would have expected. Right. Earlier in the year, M&A has been kind of slower to pick up than some bankers would have wanted, but that's kind of improved through the year. But in investment banking, debt capital markets have been on fire like all year long and have really been leading all of the kind of the fee income there. And trading has been pretty good. We've had a lot of political events this year, obviously the US election being the biggest among them. And, I think there was worries that everything was going to get very, very quiet around that. But actually, things were quite busy in the lead up, and then the kinds of volatility that we've had since have been great for traders, I think.
So what do you expect in 2025? I guess we look at IPOs, we look at possible deals, but just in general, deregulation from the U.S. will probably occupy a lot of your writing time.
Yeah, maybe. I think there's, it's still very uncertain. There's obviously this kind of this strong sense that Trump is going to be deregulatory by nature and that he's going to want to kind of free things up. There's going to be tax cuts, fewer restrictions, we'll all be off to the races. But, and especially in M&A, there's this strong, populist strain within his team, within his party. Among some of the picks for some of the important jobs, J.D. Vance, the vice president-elect, has always been a big sort of, or not always, but, in recent years, a strong campaigner against, corporate power. I think, a lot of scrutiny will remain in things like pharma, in big banking, in tech especially. I think there's going to be a good bit of M&A, almost certainly, but whether the really big deals and in some of those, really focus areas will pick up is another question.
And Paul, thanks so much. And that's my must-read, actually, of the week. Paul did this great opinion piece saying, look, mega deals will probably not lead this M&A rebound under Trump. Up next, Bloomberg Brief, Manus Craney in New York. Of course, they'll be full in on the Fed reaction, what the markets are doing, and of course, a look ahead to the BOE. This is Bloomberg.